The real estate market in 2025 isn't just about houses and prices. It's a reflection of where society is heading. Rising interest rates, remote work culture, digital innovation, and shifting demographics are rewriting the housing playbook. Whether you're a buyer, seller, or investor, understanding these trends could make the difference between opportunity and risk. Let's break down what's shaping today's real estate landscape and what it means for you. 1. Interest rates stabilize, but not cheaply. After 2 years of turbulence, mortgage rates have finally leveled off. The average 30-year fixed rate sits around 6%, down slightly from 2024's highs, but still far from the pandemic's 3% dream years. For many buyers, that new normal is forcing tough decisions, stretch budgets or scale back ambitions. Sellers are adjusting too. Gone are the bidding wars and instant cash offers of 2021. Listings sit longer, and negotiation is back on the table. Analysts call it a balanced market, though for first-time buyers, affordability remains strained. The takeaway? The frenzy has cooled, but calm doesn't mean cheap. 2. Remote work permanently redefines location. The pandemic may be over, but its impact on where people live isn't. Roughly 1/3 of professionals now work remotely at least part of the week, and that freedom continues to reshape housing demand. Instead of crowding into city centers, buyers are favoring towns with lower costs, safer streets, and stronger communities. This shift has fueled booms in second-tier markets like Austin, Raleigh, and Boise, while major metros such as San Francisco and New York are reinventing themselves to stay relevant. For many, home is no longer just a commute calculation. It's a lifestyle choice. 3. Tech is transforming how we buy and sell. The real estate transaction has gone digital. AI-driven property valuations, virtual home tours, and blockchain-based contracts are cutting out traditional friction. Buyers can preview, bid, and even close deals online without ever stepping into an office. Real-time pricing tools are making markets more transparent but also more volatile. As data updates daily, so do perceived home values. For agents, the challenge is clear: adapt or become obsolete. The digital revolution has arrived, and it's rewriting the rulebook. 4. The rise of AI-backed smart investing. Investors now use artificial intelligence to spot undervalued neighborhoods, predict appreciation, and automate property management. Algorithms analyze everything from school ratings to walkability scores, reducing human guesswork. This tech-enabled investing has also fueled micro-ownership, buying fractional shares in rental properties through online platforms. It's turning average people into landlords with a few taps. The upside? Accessibility. The downside? A flood of speculative money that's inflating prices in markets once considered affordable. 5. The affordability crunch deepens. Even with stabilizing rates, affordability remains the elephant in the room. Home prices have outpaced wage growth for nearly a decade, and the average American household now spends over 35% of income on housing. Construction costs remain high, supply is limited, and younger buyers are struggling to enter the market. To cope, some are co-buying with family or friends, while others turn to multi-generational living. A trend that's redefining the concept of the American home. Builders are catching on, offering flexible layouts with dual kitchens and separate entrances for extended families. Necessity is reinventing tradition. 6. Suburbs and small towns are booming. Urban flight hasn't reversed completely. Instead, it's evolved into a suburban renaissance. Once sleepy communities are now vibrant mini-cities offering everything from co-working spaces to walkable entertainment districts. The idea of the 15-minute city, where schools, shops, and parks are all within walking distance, is gaining traction across North America. People want space, but they also crave connection. The suburban dream has returned, just with better coffee shops and fiber-optic Wi-Fi. 7. Sustainability is the new status symbol. Luxury is no longer defined by square footage or marble countertops. It's defined by energy efficiency and carbon neutrality. Homes with solar panels, smart thermostats, and sustainable materials are commanding premiums. Younger buyers view eco-friendly living as a long-term investment, not a trend. Cities like Seattle and Austin now offer tax breaks for net zero properties, and developers are racing to meet demand. The housing market's next big divide won't be between rich and poor. It'll be between sustainable and outdated. 8. The short-term rental reset. Airbnb changed real estate forever, but local governments are finally pushing back. Cities from New York to Barcelona have imposed strict caps on short-term rentals to combat housing shortages. Investors who once raked in profits from vacation rentals are now pivoting to mid-term corporate leases or selling altogether. The era of easy Airbnb money is ending, replaced by a more regulated, professionalized rental market. For renters, that might mean a little relief. For landlords, tougher math. 9. Generation Z becomes the new buyer class. For the first time, Gen Z is entering the housing market, and they're rewriting its priorities. Unlike millennials who chased fixer-uppers, Gen Z wants move-in-ready, low-maintenance, tech-enabled homes. They value proximity to social hubs and public transport more than sprawling yards. They're also the most debt-averse generation, using side hustles and digital income to save faster. Their buying habits are influencing developers, who are designing compact, high-efficiency homes with built-in automation. 10. Commercial real estate faces a reckoning. The commercial side of real estate tells a different story. Office buildings remain half-empty as remote and hybrid work persist. Many downtown skyscrapers are being converted into residential apartments, creating a rare win-win for housing supply and city revitalization. Retail spaces, too, are evolving, shifting toward mixed-use designs that blend storefronts, gyms, and cafes. The future of commercial real estate isn't decline. It's reinvention. 11. Global investors are back. Carefully, foreign buyers are returning to U.S. real estate after pandemic-era travel restrictions and political uncertainty. Investors from Canada, China, and the Middle East are purchasing both luxury properties and affordable multifamily units. However, new regulations on overseas ownership and scrutiny over money laundering have slowed the frenzy. The U.S. remains a safe haven for wealth, but foreign investment today is more cautious, calculated, and politically sensitive than ever. The 2025 real estate market isn't collapsing, nor is it booming. It's recalibrating, finding balance after years of extremes. Rising rates, tech disruption, remote work, and sustainability are steering it into a new era where adaptability is key. For buyers, patience and strategy matter more than ever. For sellers, authenticity beats hype. And for investors, understanding these undercurrents could mean the difference between a risky bet and a smart hold. Because if one thing's clear, it's this: real estate isn't just about property anymore. It's about priorities. And those in 2025 are changing faster than ever.